Right now on a special edition of To The Point.
I don't know how we're going to come back from this. I don't even know where to start.
The toll of January's Los Angeles wildfires being felt around the state as cleanup begins.
This is twice as fast as the Woolsey fire debris removal. Faster still, even compared to Paradise.
The action state lawmakers are taking and where the request for federal aid stands. Plus, how people can rebuild smarter.
There will literally be no flammable materials as a part of the structure of the house.
And as the insurance crisis grows,
if State Farm consumers are going to be asked to pay more, that we get some guarantees.
What policyholders should know. Thank you for joining us on this special edition of To The Point. I'm Alex Bell, and over the next half hour, we're looking at the cleanup in Los Angeles and the difficult questions people now face as they continue to rebuild. And if you are a California homeowner, chances are that the insurance crisis after these fires could impact you. So let's take a look at the numbers. The cost of the Los Angeles wildfire damage is well into the billions. The damage alone is estimated to be $164 billion, up to that amount. That's according to a recent analysis from UCLA. The university's School of Management found the total property and capital losses could range between $95 billion and $164 billion, with insured losses estimated at $75 billion. This is being called one of the costliest disasters in U.S. history. In January, more than 150,000 people had to evacuate. The Palisades and Eaton fires are believed to have destroyed more than 10,000 homes, and more structures and homes are damaged. And of course, we know 28 people lost their lives. The causes of these fires are still under investigation. And this is video of the cleanup underway in Altadena. The EPA says it's removed more than 300 million tons of hazardous materials in Palisades and Altadena. Phase 1 of their process was completed in 30 days rather than several months, though the rebuilding process is just beginning. Phase 1 was completed last month. And Governor Newsom has since requested federal aid for these fires. He formally requested nearly $40 billion in federal aid in a 14-page letter sent to congressional leaders. Newsom says the money would go towards rebuilding houses, infrastructure, businesses, schools, churches, and healthcare facilities. Republican lawmakers have previously said that they would put conditions on wildfire money. They have yet to respond to Newsom's request. And the impacts of this disaster on California's insurance crisis are being felt. Later in the show, we are sitting down with a longtime insurance industry expert explaining how industry changes could impact your bottom line and also what you should really be looking for in your policies. Take, for example, the California subsidiary of insurance giant State Farm. They want to increase homeowners insurance policies by 22%, condo owner policies by 15%, and insurance for rental units by 38%. Now, Consumer Watchdog says homeowners insured by State Farm could pay an additional $600 a year for their policies. The state insurance commissioner recently sat down with State Farm representatives to get answers and ask about the company's future.
I want to know, one, that if State Farm consumers are going to be asked to pay more, that we get some guarantees that, one, they're going to continue to grow their footprint and that they're going to stay in California.
State Farm General Insurance Company is the largest insurer in California. The company says as of February 26th, they have received more than 11,750 total fire and auto claims related to the fires and have paid nearly $2.2 billion to customers. The FAIR Plan, California's fire insurance of last resort, says they have received nearly 5,000 claims related to the Eaton and Palisades fires. New claims continue to be reported and confirmed, and they say the FAIR Plan has paid more than $1.2 billion to policyholders, including advance payments to cover these claims. And the California FAIR Plan has been approved by the State Department of Insurance to collectively charge private insurance companies $1 billion to help pay out these claims. This could have major impacts across the state. I want to bring in ABC 10's Garsh Basanga. He looks at why private policyholders may ultimately foot the bill.
Governor Gavin Newsom touring the Eaton fire burn zone in Altadena in February. This time, he is touting the speed of debris removal, beginning Phase 2. Just 35 days after the wildfires.
This is twice as fast as the Woolsey fire debris removal, the fire in 2018. Faster still, even compared to Paradise.
But as families begin to rebuild, the financial aspect of this recovery is hitting a critical juncture. The California FAIR Plan requested an additional $1 billion to cover wildfire claims. This request is unprecedented. The last time the FAIR Plan sought additional funding was more than 30 years ago. Carl Sussman, an insurance industry expert dealing with the claims in Los Angeles, says,
"We were expecting in the industry somewhere around $3-5 billion of assessment."
The California Department of Insurance approved the FAIR Plan's request for an assessment of private insurers, requiring all insurers doing business in California to bear half of the cost, while the other half could be passed on to policyholders in form of a one-time fee.
The California Department of Insurance has to approve it. And what they're saying is that it's going to be a percentage. It's not a flat amount.
Consumer advocates argue the burden of paying these additional claims shouldn't fall on homeowners.
Homeowners are stuck on the FAIR Plan because the home insurance industry abandoned their neighborhoods.
Carmen Balber, executive director of Consumer Watchdog, is concerned this could set a dangerous precedent.
Letting insurers off the hook for their FAIR Plan liabilities will encourage them to dump even more Californians on the FAIR Plan.
Sussman says the industry was concerned about the FAIR Plan's assessment because it holds around 25% of the Southern California fire loss.
Remember that FAIR Plan is not a state-run agency. There's no tax money. It's literally funded by the insurance companies.
That was ABC 10's Garsh Paul-Sangha reporting. Consumer Watchdog says if the insurers pass the costs off to customers, they will challenge the efforts. We will have much more on the impacts that the insurance market might face coming up a little bit later in the show. At the state capitol, a number of bills are in the works aimed at stabilizing California's insurance marketplace and protecting homeowners from wildfires. Governor Newsom has also issued executive orders to speed up recovery and fuel management projects. So Governor Newsom's order suspends environmental regulations, including CEQA and the Coastal Act for projects like vegetation and tree removal, and adding fuel breaks, allows non-state entities to conduct approved fuels reduction work, direct state agencies to submit recommendations for prescribed fire, and increase the California vegetation treatment program's efficiency. For the first time in years, CAL FIRE released new maps identifying fire hazard zones. They are part of a recent executive order from the governor to update the maps in the wake of the recent fires in Los Angeles. And with this update comes a new list of requirements to make homes more fire resistant. So ABC 10's Jeannie Nguyen gives us a look at the maps and also how homeowners insurance may be impacted by this update.
Updated for the first time since 2007, CAL FIRE released a new fire hazard severity zone map. It's part of Governor Gavin Newsom's recent executive order to adapt to future extreme fire events.
They incorporate different factors that include weather data, topography, fire history, and all of that gives us a long-term view of that area's overall fire hazard.
State Fire Marshal CAL FIRE's Daniel Berlant says updating the new map is now possible due to new technology. The new map shows many counties growing in very high hazard acreage. In 2011, Lake County only had 5 acres considered very high hazard. In 2025, it jumped to 10,881 acres.
We believe these maps not only are more accurate based on new science and data, but also are depicting more accurately the conditions we have been experiencing for several years now.
As part of the governor's executive order, homes built in the areas deemed very high fire hazard would be required to adhere to wildfire resilient building codes. CAL FIRE emphasizes these codes are mainly for new builds, but existing homeowners should create defensible space.
Having 100 feet of defensible space doesn't mean you're removing all the trees and removing all your plants. It means you're spacing them. You're removing the dead or dying vegetation.
CAL FIRE emphasized this hazard map is different from risk maps. Those are what home insurance companies typically use to write policies. CAL FIRE says the new hazard map should not tie into insurance.
They have their own databases that they use that establish eligibility and pricing for insurance coverage.
United Policyholders, a nonprofit aimed at helping homeowners with insurance policy issues, agrees. The organization says this new hazard map will help guide homeowners making their homes more fire resilient as insurance companies calculate risk.
Insurers are less likely to write a higher risk home and are likely to charge less premium for a home that has done the mitigations.
In Sacramento, Jeannie Nguyen, ABC 10.
And if you want to check out your area's risk, we have posted a link to the fire hazard map on our website, abc10.com. As thousands of families look to rebuild after last month's wildfires in the Los Angeles area, one Northern California construction company has a solution: 3D printed homes. We first introduced you to this business back in 2022, and now ABC 10's Becca Habegger is checking back in as they work with families in LA to rebuild wildfire-resistant homes in the wake of this tragedy.
Weeks since several wildfires in the Los Angeles area killed at least 29 people and damaged or destroyed more than 18,000 homes and other structures.
Oh, and we have, a partial structure collapse.
You can't believe that it's all gone.
Thousands like Evangeline Iglesias are looking to rebuild.
3:30 in the morning, a police officer was driving up and down our road saying, mandatory evacuation, everybody out.
January 8th was the last time this single mom of 3 adult children would see her family home in Altadena. They'd lived there for 25 years. When they could return, this is what greeted them. The chimney is all that stood.
I'm sad about my house, but I'm more sad about total annihilation of the whole neighborhood. This is where my kids grew. I love Altadena.
She said her friend told her about a new kind of home.
I Googled 3D printing fireproof house because obviously I don't want this to happen again.
That's how she found a company called Emergent Construction based in Redding.
We use an on-site 3D printer and extrude concrete to build homes.
In the wake of the LA wildfires, Emergent founder and CEO Don Ajamian posted this video on social media.
If you find yourself lost, confused, not sure what to do next, please call me.
Don says this is personal on multiple levels. He grew up in Altadena. This was one of his childhood homes. And in 2018, he and his family evacuated their home in Redding during the Carr fire.
Even though it's not perfectly smooth, it's consistently inconsistent.
We visited Don in Redding, where Emergent has since 3D printed 6 homes.
Emergent is the first to actually get concrete 3D printed on-site homes permitted in the state.
As Don explained to ABC 10 in 2022, the process can be faster than building the frame of a conventional home.
We actually take the material, we formulate and mix it up ourselves. We pump it through the machine and all the way down to the print head, and the print head is controlled by the computer, which tells it exactly where the walls are, and it just lays out extruded layers of concrete that are 2 inches wide by 1.5 inches tall. And it'll do 1 layer of every wall, and then another layer, and then another layer, until it builds it up to 8 feet high.
Don says finishing the house is still dependent on the availability of local subcontractors. He traveled to Los Angeles a couple of weeks ago to meet with wildfire survivors and those he says he will now partner with in Los Angeles to help people rebuild. He adds one of the 7 total homes Emergent printed is at Woodbury University in Los Angeles County.
It's good to know that their building department's already seen this, and it's not going to be a surprise to them.
And importantly, these homes will be wildfire resistant.
There will literally be no flammable materials as a part of the structure of the house.
Emergent already has its first contract signed with a family in Los Angeles. In fact, they'll be building this same style house with 3 bedrooms and 2 bathrooms. That family is Evangeline's.
It's going to be amazing. I just can't wait.
We try to find a little bit of light at the end of the dark tunnel.
In Redding, Becca Habegger, ABC 10.
As far as costs go, Emergent Construction says right now the cost of 3D printing a home isn't much different from conventional construction, but he predicts that within a decade, 3D printing houses will get significantly less expensive as the technology evolves. And now to my conversation with insurance industry expert Carl Sussman. What do you think the future of homeowners insurance looks like in a state like California right now?
I think we're going to have to come to grips with the fact that wildfires are the new normal, that we're going to be seeing them, and that risk is going to be there with us, and our insurance rates are going to reflect that exposure.
What would you tell people right now that have homeowners insurance? What are things that they should be looking at on their policy?
Well, everyone should definitely stop and look at their policy, because a policy today does not exist that would cover everything the way we probably think it should or would. The most important thing is if you have coverage right now is put it on auto pay, be sure that it is automatically going to get paid every month or every year. You don't want to have a problem with missing a renewal. The chances are, if you miss that renewal, you're not going to be able to get that policy again. And it could be a difference of tens of thousands of dollars. Find out things about replacement cost. How much coverage do you actually have? What we're seeing with the wildfires in Southern California, numbers that seemed reasonable, $400 a foot, $500 a foot for nice homes in some of the Palisades area. Now, when we're looking at a demand surge where we're having the entire city that has to be rebuilt, we could be looking at double that. So it's difficult to try and decide where you want to fall. How conservative do you want to be? Do you want to be prepared for a fire or a fire that could impact your entire neighborhood? But the level of coverage you have would be impacted by that.
Do you see anything that people typically miss on their coverage, or if they're underinsured? Is that something that you notice?
I think depending on where they get their coverage, additional living expenses is one of the coverage areas that people tend to not really understand. And so they'll take as little as they can, or they'll take the percentage that the company's policy includes with them. That's what's paying for them to be somewhere else while the home is being rebuilt. And again, if we're looking at the wildfires in Southern California, they're talking about 12 to 18 months before we can even start beginning to rebuild there. So policies that were designed to pay for 1 or 2 years for additional living expenses, they're probably going to run out long before someone is actually able to move back into a home.
For people who maybe don't have a mortgage anymore, they're not really worried about homeowners insurance, what would you say to those people, especially that might live in a high wildfire risk area? What would you say to them right now?
Once you pay your home off, now it's 100% asset, right? It's all yours. So that's the last time you want to stop saying to yourself, oh, now I don't want to protect it. Now you really want to protect it because it's all an asset of yours. So even if it costs more than you would like it to, even if it costs more than you're accustomed to paying, make sure you have some type of fire insurance coverage because, again, that's it. That is everything now. It belongs to you.
Can California and the insurance companies that are involved cover all the claims that have been submitted through these, LA wildfires?
Fortunately, the answer is yes. And we really didn't know what to expect because there has not been a situation where this level of destruction has happened. But all of the private companies really have been stepping up and paying claims.
And I do want to talk about the insurance commissioner's sustainable insurance strategy, something we've talked about a lot. Where does the plan, though, stand after these fires? Do you think it's going to deter some of the insurance companies? Do you still think it's going to have an impact the way he wanted it to? What are your thoughts?
The timing could not have been safer because the last of the sustainable insurance strategy laws went into effect, I believe it was December 29th. It was days before the fire. And the reason I say fortunate is because if that hadn't happened, if those new regulations had not gone into place, what we would be seeing right now is a wholesale pulling out of California. Carriers would just have thrown up their hands and said, we don't see a path forward, we're not going to spend these dollars, and know that there's no way we can ever do business here again anyway, and they would have started leaving. So I think, thank goodness it happened when it did, because now the carriers, again, they're paying their claims, and they know they're always thinking 5 years, 10 years down the line, right? You and I talk about what happens today, tomorrow, next year. They're thinking 5 years, 10 years, 15 years, and there's a path forward now.
Do you think there are some concerns, though, seeing with what happened with the Palisades and Eaton fires for those companies?
Well, I think they're concerned, but they've been concerned. See, this is news for you and I because this just happened. This is something that they've been concerned about for a long time. It's one of the reasons that State Farm, if you look at the two areas that it non-renewed the most policies, or at least was prepared to non-renew, one of them was in Northern California and one of them was in Southern California. Guess what the zip code was for the one in Southern California? Pacific Palisades, 90272. So are they upset? Of course. Are they concerned? Of course. But this is not news to them. This is what they've been trying to prepare for, to be able to have a product and be able to pay the claims when they come.
And I know that we talked about this before, State Farm requesting that rate increase after the LA wildfires. What are your thoughts on it?
So I think we have a double whammy at this point. One, we have rates that have been suppressed from where they actually should have been. Rates haven't even gone up to follow inflation in the last 3 or 4 years, which is kind of silly when you think about it. When you have a claim, the insurance companies have to pay for all the things that now cost more money because of inflation, but their premiums don't reflect that.
Ricardo Lara, the insurance commissioner, he met with State Farm to talk about this rate increase. Where do things really stand right now?
What I think happened in the meeting, State Farm put in a request for what's called an emergency rate increase, which in essence, it bypasses a certain path that exists when an insurance company wants to have additional rate. And they did it under the auspice of, we can't wait. If we don't have this, we genuinely may not be able to pay our bills. It's not something that we see insurance companies do very often. I actually can't remember the last time it's happened, certainly not from a company that we would know the name of off the top of our head. And the insurance commissioner could have said, well, yes, clearly with everything going on, if we're not going to approve rate after this type of a disaster, when could it ever be justified, right? But instead, he still said, you know what? I want to sit down and talk about it. What he was saying during the meeting was he was trying to get guarantees from State Farm that, look, if we give you the rates that you're saying you need right now, will you, number one, stay in California? Because that is a fear. They hold 20% of the market in California. If they decided to throw up their hands, we would have a real problem. And number two, he was trying to get commitments out of them to offer more policies. State Farm hasn't written new policies in several years, and State Farm was reluctant to do that. And that, I think, was frustrating for the insurance commissioner and for everyone, really. So when I hear one company still not being able to commit to saying, yeah, we'll start writing business again, it's a concern of mine, because if they can't do it, who else is going to start?
And so where does the state of things stand right now? Do you think that they're likely going to approve the emergency rate increase?
Ricardo Lara said he was going to give it about 2 weeks to decide what he was going to do. And we'll see what he decides to do. I suspect he's going to have to give some level of relief because, again, State Farm has had losses. An event like this where clearly we can all accept that the carrier's paying out more than they've collected in premium. They've paid out more than they even forecasted they could ever have to pay out in claims. So if we're not able to justify rates based on events like this, I don't see how the carriers would ever be able to get any rate. And if that happens, then we would see the domino effect of the carriers not only not offering new policies like they are today, but leaving the state altogether and taking the existing clients that they had and just leaving them.
When people are at home and they're hearing, company X, whether it be State Farm or whatever, is asking for a rate increase, can you give some context as to what that means to the average person sitting at home with a policy? Because they might think, oh no, my policy is automatically going to go up. What in fact actually happens on the back end?
Well, let's take State Farm, for example. If State Farm is asking for a plus 20 rate increase, that does not mean that every policy is going to see their premium go up by 20%. First of all, they're asking for the fire portion of their policy to be increased by 20% in this example. And if you look at your actual insurance policy, it's broken out. How much are you paying for fire? How much are you paying for liability? So the first thing you want to do is look for that actual number. And then understand that 20% is a statewide average. People that are in areas that are higher risk for fire would be closer to that 20%. They could potentially be above 20%. People that are not in areas that are closer to the brush or higher risk for fire would see less than 20%, potentially even have their premium go down. The most important thing, and this probably is the number one question that I get, is when this happens, is it tomorrow? If the department approves it tomorrow and my bill comes the next day, will it reflect that? This takes a long time. If something gets approved, let's just say for fun, on the 1st of January, the department approves it. By the time the insurance companies implement it and then roll it out, you could be looking at June, July, August.
Talk to me about the current state of the California Fair Plan.
Well, the California Fair Plan is, again, it's run by private insurance companies. There's no treasury behind it. There's no tax dollars. It's every admitted insurance company in the state of California. By law, they have to participate. So their money goes into the plan. And they didn't have enough in the bank account, so they had to go back to the insurance companies to get more money. The problem is they were not staffed for this type of event, which really makes sense because if they had enough employees to handle these types of events on staff all the time, they'd be sitting around twiddling their thumbs the majority of the time, right? But because we're having adjusters that are coming in that are not familiar with California, they're not familiar with California laws or the fair plan specifically, it's a lot more challenging to try and work with these adjusters.
And so that's delaying some of the claims that are being processed.
It's delaying the claims process, and again, ironically, not because of finances, but because the adjusters aren't as clear on what they need to do. It means a little more reaching out to the fair plan, communicating with the adjusters and saying, I understand that might be what you're used to saying, or I understand that might be what you're used to doing, but in California, if you look at the policy, and then they do the right thing after that.
Thank you so much for watching. And if you have something that you think we should be looking into about the Los Angeles fires, their impact and insurance and state regulations, make sure to reach out to me and the team. You can always email us at tothepoint@abc10.com. And To The Point does not end here. To watch stories featured on our show, download our free ABC 10 Plus streaming app straight to your TV.
Thanks for watching ABC 10 Plus. And now that you're here, why don't we take a look around and see what else is here? The very first tile on your left is always going to be streaming 24/7. You can find us adjacent to that, breaking news if it's there. And then right next to that, a replay of the most recent newscast. Whether it's ABC 10 Morning News at 5, 6, or beyond, it's going to be there. The forecast beyond that, and then right beyond that, the news that matters the most. Now that you know the basic tiles, let's go up to the top and take a deeper dive into news. We have every single newscast that you would need, including To the Point with Alex Bell, taking a deeper dive into the issues. Beyond that, ABC 10 Morning News at 5 and 6 and 11, the evening shows as well. Below that, you can watch the top stories from To the Point. Under that, Dollars and Cents, where you can learn how to navigate this challenging economy. And below that, you can watch our award-winning ABC 10 Special Investigations, where we hold the powerful accountable. Going into weather, look, it's the 10-day forecast, getting you ready for the weekend and beyond. Beyond that, sports. I know you care about the Sacramento Kings. We have the most comprehensive guide to anything, everything Kings in the locker room and on the court. We have it. Below that, I know you care about the San Francisco 49ers. We can't mention Bay Sports without talking about the Oakland A's. We have that too. Backing out again, come up to the top and join me on Verify. I'm super excited about this. Our experts are checking the facts, verifying the truth for you. Jump up now to shows. Very excited about this. Oh, look. It's Take a Look. This is my show. I love movies, and if you love movies or streaming shows, whether it's on screens this big, or this big, it's Take a Look. Recently went behind the scenes, sat down with Lady Gaga and Joaquin Phoenix to talk about Joker 2. I love the movie, and oh, I just heard you shout you hate the movie. Jump in, we talk about it on this show. Other shows, Bartell's Backroads, go up and down the state of California, tank of gas getaways, one fuel cell getaway, like places like the Toy Museum. This is what kids did before they had screens. Over here, the Moaning Caverns of Calaveras County, one of the most coveted caves in all of California. You know, watching this show, I discovered there's a cave that could fit the entire Statue of Liberty in your own backyard. You'll find about that and more with Bartell's Backroads. Down below that, To the Point. It is one of my favorite newscasts because they talk about news with Alex Bell the way you talk about news. It's conversational, but in-depth at the same time. Below that, Your California Life. Love this show. Whether it's entertainment, food, beverage, lifestyle, it's there. Desiree Shepherd hosts and does an amazing job. So there you have it. It's ABC 10 Plus, the app. What do you need? We heard you and we got it. Thanks for watching. Thanks for streaming.